People have stopped paying their Capital One credit card bills, and it could end up hurting everybody else. They're saying things like, I can't even make the minimum payment, and I'm struggling to make the payment in time. And I actually ended up not making payments for the last 2 months. There's really no denying this is happening way more often with Capital One than any other large credit card company, but why is that? I'll show you how the amount of people who stop paying their credit card bills is the size of the populations of Miami and Atlanta put together, the single reason that stops 30% of people from paying their bills, and how every other innocent Capital One customer like you and me could get their credit limit slashed because of the people who didn't pay their bills. When you completely stop paying your credit card bill and miss at least one minimum required payment, that's called a delinquency. When these missed payments accumulate across many accounts, they contribute to a higher delinquency rate, which is bad for everyone. Capital One's credit card delinquency rate for 2021 was just 2.2%, but now in the first quarter of 2024, it shot up to 4.48%. That's over a 60% increase in the amount of people who stop paying their credit card bills. Amex, on the other hand, only has a delinquency rate of 1.4% this year. That means 3 times as many people stop paying their Capital One bills than with Amex. This difference really highlights a greater level of financial stress in Capital One's customer base compared to other banks. Capital One has about 106 million credit card holders. First off, that's a lot. But second, that means over 4.7 million people are not paying their credit card bills. Just think about the populations of Miami and Atlanta put together, and that's how many people are not paying their bills with Capital One. Listen, I was shocked at how many people were begging for help from Capital One because they couldn't even make minimum payments. So let's take a look at the data points to see what people are actually feeling when they're dealing with Capital One. They said, try for financial hardship for my Capital One card. With my Amex card, I was able to settle with the company where I pay $124 per month for 4 years, and then it's paid off. Card will be closed afterwards. I called Capital One to see if I could do the same or similar thing since I'm struggling to meet the minimum payments. All they offered was 3 months of no fees. Does Capital One offer another hardship service? Oh man, that's really disheartening. They only offered this person 3 months of no fees. It's kind of surprising that they don't have more comprehensive support for people struggling to meet their minimum payments. Another person said, I called Capital One today and I got connected with a Taiwanese sounding lady. I don't know if it was cause I was yelling through my telly, but that buster said all they can do for me is cancel late fees for 3 months. I never even had late fees. It's so irrelevant. I'm about to call again. I'm struggling so bad to keep up. Okay, they didn't have to call him a buster, but that has to be incredibly frustrating. They reached out for help, and all Capital One could offer was to cancel late fees for 3 months when they don't even have late fees to begin with. A different person said, my 0% APR ends on April 4th, and I have a balance of $3,000. After that, it's 29%. I had unplanned medical expenses that kept me from following the plan. I had to pay it off by April this year. So now I know what to do to get help. Better for them than getting no payments at all. Listen, that's really terrible. A jump to 29% interest after already dealing with unplanned medical expenses. That's got to be rough. The next data point said, I literally just got off the phone with Capital One. They have a hardship program. My monthly payment is now a minimum of $79 a month until the balance is paid off. My card is canceled and no more interest is accruing on my account. If I am late more than 120 days, the plan is null and void and interest will once again be applied to the balance and sent to collections. And the next person said, I literally just got off the phone with them and they only offered me the same thing. My minimum payment was $140 before I was late this past month. I've never been late before. And now they only offer me a plan of $247 of monthly payments for 3 months to catch up. What kind of hardship program is that? I can't even make my minimum payment. So why do you think that doubling the minimum payment would help? So I actually ended up not making payments for the last 2 months, and I called back again a couple weeks ago and qualified for their hardship program that reduced my APR from 28% and 30% on 2 of my cards to 9.99% each for 9 months and a minimum payment of $86 a month. I think when you're past due, you start to qualify for more programs. I never like to be past due, but I just couldn't make my minimum payments any longer without interest eating it all up. This is absolutely outrageous. How can Capital One think doubling the minimum payment for 3 months is helpful when they're already struggling? But you know the worst part is that they had to let their payments lapse to finally get some real help. Next, they said, I just got off the phone with them. No help. My account was 2 months behind. I finally caught up and was reaching out because I can't keep this up forever. They couldn't offer me anything. The next data point said, I'm in the exact same situation right now, and to call them unhelpful is an understatement. I told them I have medical bills of $7,500 and was unable to make my minimum balance. They told me they can offer me 3 months of no late fees. That's like someone's about to lose their house and you offer them a $25 Starbucks gift card. And guys, it gets even worse. They said, drowning in credit cards. I have 2 credit cards and would love some advice to help pay off the debt. I'm interested in consolidating the debt as well. The 2 cards are a Discover credit card balance of $17,300 with an interest rate of 23% and minimum payment of $398. And then I have a Capital One credit card balance of $3,600, interest rate of 28%, and minimum payment of $278. I do not have any late payments on the cards except this month. I'm struggling to make the payment in time. And I called to push it back, and both creditors worked with me on that. I'm having a financial hardship due to how low my income is. I made under $27,000 in 2023. I also am having painful medical problems, endometriosis, and it has been difficult living, let alone thriving. You know, I was just thinking, if you ever have a problem like this, you could apply for medical assistance programs like hospital financial aid. You could call the hospital billing department to see if they offer financial assistance or charity care. You could even reach out to nonprofits like the Patient Advocate Foundation or Cancer Care for help with medical bills. And you could even go for government assistance and apply for disability benefits like Social Security disability insurance or supplemental security income. You could also check out state-specific programs for extra financial assistance. Now, what you'll notice is just about 30% of the people self-admitted that they couldn't pay due to medical bills, and everyone else pretty much overspent on their credit cards. But if you actually need some help paying off your own capital and credit card, here's a few steps you can take to get into that hardship program. Number 1, if that first rep gives you trouble, call in again to get a new rep that's more helpful. 2, give specific examples of why you can't pay, like medical bills, job loss, reduced hours at work, family emergency, home repair, or car repair. Then 3, wait until your account gets past due to see what new options become available for you. And then 4, the best you can hope for is 9.99% APR for 9 months with a lower minimum payment. And you know what? I studied why people stop paying their credit card bills and stumbled upon the main reason why it affects Capital One customers way more than any other bank. One of the main primary reasons for delinquencies rising with Capital One is the broader economic environment. Inflation and higher interest rates have squeezed consumers' budgets, making it harder for many people to keep up with their debt payments. When everyday expenses like groceries, rent, and utilities go up, people have less money available to pay off their credit card balances. And just think about it. Overall increase in groceries was 20.7% since January of 2021. People paid more for food at home and food away from home. And that's according to the Bureau of Labor and Statistics. And you know what else went up? Yeah, the rent went up. And that went up 5.5% since 12 months ago. And if you thought your electric bill was higher too, because it was, it's up 5.1% in the past year as well. And during the pandemic, many people benefited from government stimulus payments and forbearance programs, which helped keep delinquency rates artificially low. However, these relief measures have ended, and some of those same people are just struggling to adjust back to normal financial conditions. You know, Richard Fairbanks, which is Capital One CEO, pointed out that some of their charge-offs were delayed due to these temporary relief programs, and now that the effects are wearing off, delinquencies are catching up. And Capital One is one of the biggest credit card companies and banks in the country. It typically operates what is known in the credit card industry as the barbell business model. It issues credit cards with those with less than great credit as well as with super high credit and little in between. The low credit score group keeps a high balance, bringing the company interest revenue, while the high-end customers spend heavily on the cards, bringing in fee revenue from merchants. If you haven't noticed, Capital One has the highest interest rates in the business. For a while, their highest interest rate was over 30%. Ouch. But now they top out at 29.99%, which is still about 5% higher than any other large credit card company will give you. Those higher rates mean less money in cardholders' pockets after they pay every monthly bill, making it harder for them to keep up. Interestingly, though, while delinquencies are rising, consumer spending remains strong. This suggests that many people are still relying heavily on credit cards to maintain their lifestyles, even as their ability to repay those debts disappears. This behavior can create a deadly financial situation where delinquencies are likely to continue increasing unless there is a significant economic improvement or changes in people's spending behavior. And we know this because Americans have been increasing their credit card balances quickly in the past few years of high inflation. In the fourth quarter of 2023, Americans held $1.13 trillion on their credit cards, and that's up 1.2% according to the latest data from the New York Federal Reserve. Now, when delinquency rates shoot up, it doesn't just affect the borrowers who are struggling to make payments. It hurts everyone like you and me trying to get approved for credit cards with Capital One too. We could start seeing more account reviews with potential credit limit decreases. Check out this data point. It said, I just got this email from Capital One. It said, we're writing to let you know about an upcoming account review scheduled for May 2024. Over the last several months, the highest balance on this account has been significantly lower than your credit limit. Because of this, your credit limit could be decreased following this review. They said, if your credit limit is decreased as a result of this review, we'll notify you and make sure to keep your credit limit significantly above your highest balance from the previous 2 years. You can opt out of this review if you anticipate the spending activity on this account to change. Simply call this number by May 11th of this year and follow the prompts. Thanks for being a Capital One customer. We look forward to continuing to serve your needs. So here's what I think. If Capital One notice you might not be utilizing much of your credit limit on a given card, they may target you for account review. But the great news is you can easily opt out and decline the review. And this person even wrote an update saying literally 30 seconds to call the number and press 1. So that's good. Another person said, I recently got an email from Capital One stating that my Venture X account will be scheduled for a review in June and that the review could result in my credit limit being decreased. The account was and is currently approved for $30,000 limit. And over the last year, I only spent between $500 to $2,500 on the card per month, typically somewhere in the middle. Now, all this person had to do is call that number and opt out to keep their $30,000 limit. And a while back, I analyzed over 100 data points to see what credit card companies gave the highest limits. And I found out that the Capital One Venture X card was the most likely to give you a starting limit over $20,000. And I found the average starting limit for the Venture X card was $18,700. That's crazy. I actually have the Venture X card and it's my largest credit limit too at $26,000. I like that it comes with a minimum starting limit of $10,000 since it's a Visa Infinite card, and there's a 75,000 mile intro bonus, and it comes with some game-changing features like 10x miles on hotels and rental cars, 5x miles on flights, and 2x miles on all of the purchases, which makes this a legit one-and-done catch-all card. This card could replace 2 or maybe 3 cards in your setup, or you could just run every purchase through the Venture X and still earn great rewards. And you know, Capital One really threw in the kitchen sink at this card because they included cell phone protection, lounge access, TSA PreCheck, and primary rental car insurance into this card. So just hit the link below to learn more about how to apply for the Venture X card and get a bare minimum $10,000 limit along with 75,000 mile sign-up bonus. Now, you should know that as more customers default on their payments, Capital One might increase interest rates and fees across the board to offset losses. This means that even customers who are managing their credit well might end up paying more for their credit cards. And that really makes it more expensive to carry a balance. So if you're just paying off your statement balance each month, then you really don't have anything to worry about here. But we could see their rates peaking above 30% again if delinquencies continue to go high enough. And another thing Capital One could be looking at to fight back the risk of further losses, Capital One might tighten up its lending standards. This could involve stricter credit score requirements, lower starting credit limits, and more thorough income verifications. While this is intended to prevent new delinquencies, it also means that some people who previously qualified for credit might find it more difficult to get approved for new cards or credit limit increases with Capital One. The CEO of Capital One even said, "We became alarmed about credit score grade inflation during the pandemic and adjusted our model benchmarks so that we weren't fooled by that." And to his point, when times get hard, banks tighten up and have less of a lending appetite. They can't stomach as much risk as they normally would. So what does that mean for you? That means you're more likely to get denied when you apply for a credit card. And if you want free access to over 67 credit cards that will pre-approve you without a hard credit pull, then definitely check out my pre-approval master list below. And if you want to find the 5 credit card companies that give you the easiest approvals despite having low credit scores or a bankruptcy, for example, then hit this next video right here. And thank you for watching.